So far, we are still under the impression that this is a head of the head and shoulders topping pattern carving out. And look, you can see on the Dow today that the stochastic did give a bearish cross. You're getting to see these narrow range bodies for several sessions now. The sell signal is given when you close below the range of these candlesticks. We have the divergence on the MACD setting up. We have the divergences on the internals that I showed you for the weekend video. We're getting just bearish looking types of patterns. Again, I want to mention that this is not a bullish up leg move. This is a bearish rising wedge. So we're looking for more downside in the days to come. Now, it takes time for a top to form before it gives way. So a lot of time goes into carving out this particular pattern. The best indication that this is a head and shoulders topping pattern carving out is given all of the bearish implications, along with you can see sort of this is somewhat of a left shoulder, and a lot of times when this carves out, you see a buy the dip kind of the crowd that buys all the dips comes back in, prices get back above, and then they kind of settle here before they give back to form the head of the pattern. So again, we've had a huge run up, but you're starting to see now momentum is really not doing anything, and prices have kind of been sideways. If you look even back to previous, before this kind of rounding pattern. So we've got a bearish cross. The MACD has crossed back up in terms of its bullish sign now for several sessions, but again, we are having a hard time getting back above these peaks, and we really have not been able to decisively break and rally away from this 1370. Sorry, this is the Dow, so this would come in right at the 12,876 level. I mean, we are at the 13.3 almost, but again, a lot of times when you break the previous resistance point and you get this impulse bar, you get follow through, and we haven't really seen much. We had this one day, and then ever since then we have just kind of barely moved either slightly to the upside or sideways. So, like for example, when you break this support level, we had tremendous follow through. Again, when you break this support level, you get more, you get follow through. Now you eventually back test that level, but you get follow through, and we're not really showing much of follow through. I mean, it's different because we're coming off of major divergences and towards the end of a trend move. So when you throw in that with the fact that we've broken out from a previous resistance level, you've got a less of a chance that the market is ready to begin a new up leg bull market. So understand that and keep that in mind, because a lot of the world right now is talking about how bullish things are, and this euphoric psychology that you see in a lot of investors is a fake out. Nobody's going to tell you that the top is in, or nobody's going to tell you on TV, that hey, we're really bearish and we think the market's going to go, down, much, more down. You often get that sometimes, but it's more overlooked than anything when you are at these euphoric levels. Okay, so I had mentioned the dollar, and here it is. This is on the hourly time frame. I want to point out the importance of the head and shoulders topping pattern, because it often plays out in many of the averages, many of really stocks in general. It's just that it's hard to look for just that one pattern. If you really just look for the head and shoulders topping pattern, in almost every stock you'll at least see it play out once. I mean, you'd be surprised how often it carves out. But again, here we have it, and I have it labeled here: the left shoulder, the head, the right shoulder. The right shoulder, like I've said before, is usually a very feeble rally up. It kind of drifts up higher, forms a bear flag, and then it just gets slapped back down. Now, we did, with that move, break this trend line, and so we had the divergences setting up, giving us a warning. I had mentioned, I believe it was last week, how we were getting a divergence setting up here, and then we rallied back up, but the swing high did very little to get back above these highs. And given this impulse bar, I was kind of expecting much more. But again, we retraced, and we kind of just grinded sideways to slightly higher, and it was kind of showing you that prices were choppy, and it was harder and harder for the bulls to push this move higher. Again, you could have seen the RSI diverging. Now again, we have broken this trend line, and we're now beginning to show a divergence on the MACD. We have not crossed back up yet, but we're oversold on the RSI. The RSI again showing a double bottom. So let me show it to you again with volume. Now here it is. I don't have it labeled again, but here's the left shoulder, the head, the right shoulder of the pattern. You could even say a 1, 2, 3. This is possibly a subwave of wave 3, but we have majority of the volume on the first leg down, this panic sell-off, and then we get again another impulse to the downside. But the volume, if you look here, it's getting less and less. So it's showing you that sellers are less interested in selling the stock. And again, we have really this divergence in volume. We have the divergence setting up on the MACD. Now, we would have to throw in some retracements because we did break a trend line, so we'd have to carefully watch the next retracement level coming in, as well as this previous low. Okay, so all of this area was a support zone. And to give you a better idea of what the daily chart looks like, it could very well be that this here is the left shoulder, this is the head of the pattern, and then we're forming the right shoulder of the pattern. And oftentimes this right shoulder, like I said, is, instead of a top, it would be a bottom here, and you get this kind of weak little sell-off. The difference between a reversal and a sell-off, you can see in the way the candlesticks are forming. You can see how it's a controlled sell-off. You can see that there's both buying here at each wick of the candlestick. Now this is obviously again speculation. This is we don't have the defined pattern exactly. Okay, so this may very well be actually, that's what it looks like to me. That's all I can say. Now, notice the volume here is becoming less and less on the daily chart, again, like we were seeing on the hourly chart. The problem with a full-fledged sell-off is that we're not getting much sellers here. So usually when you see the kind of selling for a reversal, you get like people actually behind this sell-off. You get people liquidating their shares. So again, the idea that we could be forming a head and shoulders topping pattern would also coincide with this forming an inverse head and shoulders bottoming pattern. Doesn't that make sense? Okay, so I had a question, and this is what I'm going to wrap up with, and that question was, how far down can we go? Okay, now, this is assuming that we are forming the head and shoulders topping pattern. Okay, so assuming that we are developing here the head of the pattern, we would then get a small pullback. We would rally back up, that feeble rally for the right shoulder, and then the sell-off following that right shoulder would be more or less a panic sell-off. Now, if you study the type of head and shoulders pattern, you can see that it's the same pattern when it's an inverse head and shoulders bottoming pattern. And a lot of times after a head and shoulders topping pattern, what you get is a head and shoulders bottoming pattern. So the best way to, I guess, decide how far down we can go would be based on that initial panic sell-off. Okay, so, and usually when you get that panic sell-off, and let me show you kind of like right here, we came off of a left shoulder head, head right here, and then we had a right shoulder. Now we had a panic sell-off. Okay, now following that panic sell-off, forget about this sideways action. We had a slightly lower low, and that's usually what you get. Okay, now that is to help you in terms of finding where the bottom is, in terms of what we can expect for the next type of bottom. But as a general rule, when you get a panic move, there's usually one or two more bottoms that follow that panic sell-off. And we haven't seen even a sell-off yet. So assuming that we get one in the days to come, and of course if we rally back up like most any stock or really any price action after a sell-off, you try to get a little back test. And following that back test, like I said, we should get a panic sell-off, and you'll see the VIX surge. Now, I see several gaps on the SPY, so I have my eyes out for certain levels, and I believe there's one even down at this level. It's I'm not exactly sure this is in the SPY, but we can't know for sure, but we can definitely know where a good entry point would be at. But if I were to take my retracement level, I would say that given from the low to the high, I'd be looking along the lines of more or less the 50% mark. Okay? Now, given this whole entire move up, you could easily say that on this run up, we were kind of challenging the 50%. Okay? Now, this is not assuming, this is assuming that we have peaked here. Okay? But that's, totally on your part guessing, or anyone for that matter. But we can clearly see that this whole entire move was a fairly strong level to get above, because we had to get to this level first. Prices strongly reacted off of that level. It was clearly holding as resistance. We got to rally back up to it. Resistance again. We held up the second time we sold off, and then we managed to break through that. And of course, you can kind of see the gap. Now, again, this was a trend line drawn from the, this point here. If you draw from here to there, you can see the gap where it formed. And, again, gaps are kind of break bridges where the support and resistance levels are. But aside from that, coming off of the major divergences and how low the VIX is, we got the internals diverging. We're not going to necessarily get just a small pullback. Okay, we would be looking for a larger correction in play. And so the first level that you would want to watch is the 50% retracement of the entire leg up. Okay, so that's one good idea. I've given you the type of sell-off that you're looking for. Once we get the panic sell-off in, then usually there's a little bit follow that, and so you can either pick and choose in terms of whether you want to determine a buy point or whether you want to take profits. So I hope that helped. If you have any questions, like personal questions that you want to ask me, feel free to email me at darah@live.com. That's DARAH@live.com. And I hope you guys are liking the blog so far, and I know I'm enjoying doing this. So yeah, anyways, have a good night.